Okay, now we are going to see uh, if we have to choose, let's say you borrow money from bank, you want to borrow money from the bank in the form of term loan. At the same time, you want to borrow from the bank in terms of hire purchase. Okay, we want to see what could we do. I mean, how we assign this project implementation costs and how it match the source of finance. So you need to go to the second tab here, right? So most of the time, as I told you in the class, you have to find the balance between project implementation cost and source of finance. You must make sure these values are equal. Okay, in fact they are equal, but I told you that you must make some adjustment. What kind of adjustment? If you don't make adjustment, I mean all these costs that we call project implementation costs, they all will be financed by loan. Therefore, your company is quite risky because you borrow. I mean, they're all based on borrowing. Okay, one day you have to pay your amount of borrowing. So that's why you have to verify rather than all financed by loan. You should find or seek other source of finance in the form of hire purchase or own contribution. Now, before we go for this two, I just want to say that you must set your working capital at 1 month, because normally the working capital, for us to calculate it easily, we set it 1 month. If you put more than 2 months, I mean more than 1 month, I think that um, the numbers will be slightly difficult to interpret, right? In terms of contingency, I told you that this must be set at least maximum 10% from the total that we have here, 200,000, 210,000. Okay, you may refer to my previous lecture. Okay, I said maximum is 10%. Okay, contingency is like you're providing the backup. So this 21 taken from the original numbers just now, which is the original numbers is here, which is 210. So once you set, you take 10% from that 210, it's going to be, sorry, it's going to be 21,000. So you sum up the 21,000 plus 210,000. This will be the new cost of doing the business. And then how you finance this business? Okay, so you have option. Other than loan, you can use the hire purchase or you use on contribution. Now imagine that we have the land and building, and let's say you are someone that own the buildings from somewhere. Okay, let's say your father has the building, they give you the land, so you don't have to rent or you don't have to buy the land. You don't have to borrow or make the loan. So this one, let's say you see here 100K here. Okay, right now it is financed by the loan. So let's say you don't want to finance this from the loan because you have your own land, so you put these numbers 100K. Okay, so you will see this thing will disappear. Okay, disappear because this cost is financed by the your own building or your own land. Okay, now so it seems that in this case your cost now is financed by loan 131,000 and 100K from the existing asset. Imagine that, let's say you want to contribute your own cash. Okay, how much you want to contribute your own cash? Let's say you want to contribute 20,000. Okay, it's okay, 20,000. Let's say you put 20,000, you share among yourself 20,000. Okay, see. Okay, so the rest, which is 3,000, I mean the leftover 3,000 here, will be financed by the loan. Okay, so is it okay if we finance all by cash and on I mean by cash and existing fixed asset? It is not okay, because one of the reason, because at the beginning we don't have cash. Normally we have to borrow. Okay, so let's say we have vehicle here, 40,000, right? You finance by loan. Actually that should not fall under the loan. Instead, I told you that that one should be under hire purchase. So you put 40K here. Okay, so see, disappear here, it appears here. So now you see that it's more balanced. Okay, and then I told you that when you have this one, then it affect your tables. So see, now you have the numbers, the figures for the hire purchase, because you have just shift the numbers from the loan to the hire purchase right now. So you can do for the rest. If let's say you think that you don't want to pay them by cash, you want to finance them by loan, you can pay by cash. Then you put there 5,424. Let's say. Therefore, the number of loan here will be decreased. All right. For example, see. Okay, so that one will be paid by the cash. All right. Or maybe you want the combination of that. Let's say this 5,424, you want to pay about 3,000 only. Okay, 3,000 only. Pay by cash, meaning that the rest by loan. Okay, but you cannot put by hire purchase, because hire purchase, as I told you, that one only applicable for the vehicles. All right. If you want to put hire purchase, I think this one is also okay. Let's say you want to pay 5,000 by hire purchase. Yes, you can. All right, but only these two, I mean the vehicles and also the machine, can be financed by hire purchase. Most of them are financed by loan or by cash, or the existing one. So depends on your company attitude. Some company they prefer to use more loan, some company they use their own contributions. Okay, but I think that this one is quite balanced. Why is that quite balanced? Because you see that the loan here 63,000, so meaning that you can minimize the cost of paying the what we call the bank in terms of interest rate, or any kind of purchase. So always we want to maximize this value. If possible, try to find the balance between these two. For example, right here, this one is 10 100, this one is 23, so 123. This one almost 100,000. So I think you can find the balance between your own contribution and also the loan here. So I think this is a good balance. But if you think that you want to make some adjustment, it's up to you, right? So what happened to this one, this value? This value, I mean this value here, they all financed by loan. They don't finance by hire purchase, neither nor by cash, neither nor by the existing fixed asset. But they can be financed by the cash, but not by this hire purchase or own contribution. That's why you can see that they are something that you cannot put the numbers. Okay, so that's the idea about that. But the key to this discussion is you must make sure that the cost is equivalent to the source of finance. That's the idea, right? So I think that we are good enough with this source of finance, and then I think that we done with this step. So if you want to make some adjustment, it's up to you. But as I told you just now, only vehicles and machine can be financed by hire purchase. The rest can be financed by loan, or can by cash, or if you have existing asset, the best is to use the existing asset, because if you don't, that means that it's quite struggle in terms of generating the cash flow, right? So this is the cash flow. You see that there is 1 month that you have the negative cash flow, especially first month, right? But I think that's okay, as long as you the rest of the month, I mean if you have 1 or 2 months that you have negative cash flow, or we call it deficit, negative, or maybe red color means that deficit, I think that it is still okay, right? Because not all the time you can generate positive. Okay, so these are budget that you actually that you have to pay for one. I think that if you can see that here, for the thing that we have here. Okay, these are actually simply the thing that we have here. Okay, they bring it here on the budget. Okay, so you don't have to touch this one, they all are auto generate. As for the tables, this one also auto generate. I also explain to you how to use this one, eh? uh, okay, then we have the cash flow. This one also auto generate, that based on the your previous input here and here. And I can say they are quite healthy. Why? Because you constantly produce positive cash flow, even it is small, but I think still we have a cash flow. How do you get the cash flow? This one auto generate, but as I told you in the exam, in your class, it is based on the cash inflow minus the cash outflow. Therefore you will have the either cash surplus or cash deficit, and then this value will be brought in to the next month. Okay, will be brought in to the next month, right? So that's how you do it. All right. Beginning cash 62,065. 65. All right. uh, Okay, I think that